Do you think there will actually be a significant amount of foreclosures to actually shift the market when like so many people have so much equity because of the whole pandemic run up that happened in property values? Like, do you think the
Yeah.
equity will not allow them to foreclose because of the whole pandemic run up that happened in property values? Like, do you think the
Yeah.
equity will not allow them to foreclose?
No, but I mean, yeah, because so a lot of the thing is if they and we talking about personal property. So personal properties, people get emotionally tied to them. And the one thing that's going to prevent, or two things maybe. So for one, if somebody is able to refinance during that time, they not going to want to sign up for a 7% interest rate if they just got like a 2.75 or something like that. Even though it will still make financial sense to, because they can tap into that equity and save that home, But most people they're not financially literate, because they don't teach this stuff in school, so they don't understand. They just like, I don't want to hold, I don't want to. I mean, this stuff because now, even if they do that, all right, they can take that equity. They might can move somewhere, but what they're going to do is they're going to try to make that payment every single month with that money. That's going to dwindle down. You know what I
Yeah,
mean? The income and stuff, and it's just going to leave them in hot water. So that's the problem with that.
interesting. So it might be like a slower burn because, like you
Yeah,
said, if
it's
they
gonna be
try to
slow.
make the payment, yeah, they might cash out refi or something like that and try to make the payments with that, but that money will dwindle over
Yeah,
time, and then they might foreclose down the line.
yeah.
Yeah, that's
And
interesting.
And another thing to consider is that if you're facing foreclosure, that means you're not paying your bills, so your credit is going to go down. So you're not going to qualify for a loan with the bank or
Mm.
anything like that.
Hey, that's a good point. I never thought about that.
So
Uh,
you do see like foreclosures happening then, if
oh
I'm
yeah,
hearing it right.
absolutely. It won't be like 2008, but it's definitely going to happen for sure. Unfortunately, but
Yeah,
that
got you.
equates to opportunity for those that are prepared.
Right. And just to make sure I understand this for my own selfish needs, right? Like how would you like, how would you say is the best way to be prepared right now? Like stacking cash, or would you say invest in during the downtime? Obviously stock market's super low,
Yeah,
and if I'm not an expert by any means, I'm just thinking out loud here. Like in real estate, I know for stocks how they trend to go up, right? I understand that, but real estate is going to be a long effect. Like we're not going to see everything you're talking about in the next 2 months, 3 months.
right.
It's probably going to take some time. So would you suggest maybe investing in the stock market, pulling out the returns from the market, or would you just say stay heavy on cash?
I would say stay heavy on cash. I wouldn't mess with the market. And there's some opportunity, but you gotta really know what you're doing. So if you're not really professional, I mean really skilled at the market, knowledgeable and been doing it, I wouldn't do it now with plans to come up in preparation for the recession, because one thing I do know is that the stock market isn't done yet. You know what I mean? It's going to dip even further. So I would wait. I would hold off and just wait. You know what I mean? So stack up. If you have property with equity, refinance and tap into that equity. If you have holding on to properties and the headaches, get rid of them now, especially if people aren't really paying, or if you have a hassle getting rent from people, get rid of it. You know what I mean? And prepare, because just don't get emotionally attached to this stuff, because again, it's about the biggest one of the biggest things that determines your success in real estate is being able to predict the future to the best of your ability. You know what I mean? We don't got a crystal ball or anything like that, but you just got to pay attention to what's going on in the world. You know what I mean? Look at data. Numbers don't lie and stuff like that. You know what I mean? Look at the past historical performance of things, and different reoccurrences. So it's funny. I just saw something. I'm from Philly, so I saw something, and I couldn't believe it. So it said that the last four financial crises, it said the short shot way to know if we're gonna have a financial crisis is if the Philadelphia Phillies win the World Series. So
And they're 5-0 right now.
yeah, you know what I mean. The
That's
last
crazy.
Oh no, y'all are 6-0 actually, right? The Eagles.
might be six. Oh yeah, the Eagles. Yeah, the Eagles six.
Yeah.
But I mean, the Phillies are in the playoffs. So
They'll play. Yeah, they're doing that thing right now too.
we might win the World Series. Yeah, but that happened in 1929, happened in 1950 something, whatever that was, happened in '08, and now it look like it might happen again. You know what I mean? So,
That's
That's a
insane.
crazy coincidence.
watch the patterns. You know what I mean? So you better get prepared. Yeah, me personally, I'm selling some stuff. I'm refinancing. I'm stacking. You know what I mean? Because I'm trying to clean up just like I did in 2008, 2009.
That's
So
dope.
that's
And I
fine.
just want to make sure people understand that even though the interest rate is like 5-6% right now, it's okay to refinance if you have equity in your home.
Yeah, yep. And you know that payment wouldn't kill you. Yeah.
Right.
Yeah,
Right.
it's a numbers game. And I like Newski, I know I want you to do the back talk thing. I got one quick question that I just wanted
Yeah.
to touch on. Yeah, like one quick question, bro. Like, so as far as areas to invest in, like right now I know like Florida is extremely hot. Like many different parts of Florida.
Mm-hmm.
Um, just do you suggest that people get into areas that might be cheaper than others, right? So these might be areas that might be D areas. Or do you suggest they just kind of stick with the higher end, higher quality areas where more money is? But obviously, the D areas might give you better cash flow and everything, and they're also lower cost to entry. So it's like, do you suggest they do that and maybe Section 8? Like, how do you feel about Section 8 and just areas like this in general?
I'm big on Section 8 because if you think about the pandemic, you know, they the only ones that got paid consistently. You know what I mean?
Mm-hmm.
Like that's money that's predictable income. You know, so if you can get Section 8 and one of those D markets with great cash flow, I know a lot of people is killing it, and you know some of those markets like specifically Cleveland right now. You know, I know a lot of
I'm
people.
sick. I'm sick about Cleveland, bro. I was
Yeah,
supposed to
Get
be in
there.
there.
yeah, it ain't too late. It ain't too late. You know, it's about to be more opportunity. You know what I mean? Because a lot of people overextend themselves. Like again,
Bro,
Mm-hmm.
they watching people on Instagram. They seeing HGTV, and they just aggressive. You know what I mean? And if one person don't make a payment, then that can knock them out the game. You know what I mean? Because they don't have the reserves. They put everything into these projects and stuff. You know, and which isn't wise. You know, so you're gonna see a lot of opportunities. So no, y'all just get prepared for sure. Yeah.
That's dope. That's dope. And I know you just gave us a lot of bad talk, right? And the reason why we say bad talk is like it's basically another way of saying, you gave us a lot of gems.
Mhm.
But what we ask is all our guests, right? We ask, can you give us one final piece of bad talk like that, one last gem
Oh,
before we
yeah.
wrap everything up, just so the audience could be like, yeah, this was dope.
I got y'all. So this final piece of bag talk, I'm gonna put y'all on to something that y'all might be aware of, but I'm pretty sure your listeners and viewers, probably isn't in tune with it. Majority isn't either. So y'all know I'm a hard money lender, right? So I make money by funding deals for real estate investors, but people don't understand the process of what happens after that. So when I fund a deal, and most hard money lenders, so I'm a direct lender, right? So I'm funding it, and then I'm selling a note off. Most lenders are selling notes off to aggregators. And loan aggregators, they package the loan up and, put them on Wall Street and sell them as securities, and so that's the note game. Like, people don't know that you can invest in notes as well instead of the physical property, so this is another opportunity, y'all, that a lot of people aren't on. So instead of the physical properties, that's what everybody's chasing. You know what I mean? But the notes is where it's at because it's two types of notes you can buy. So again, when I every note that I fund, every property that I fund, a note gets created, and we sell it off. I'm selling them to institutional investors, sometimes third party. I mean, sometimes individual investors like y'all. You know what I mean? Who just want to buy notes. They might be professionals, like like doctors and stuff. They got the money. They don't have the time to invest in real estate. They don't want the risk. So they want that cash flow every month. So they'll buy a note. So let's say, I fund a deal for 24 months or something like that. And let's say 10%. We always make sure it's equity in the deal. You know what I mean? So let's say we funded 70% LTV. It's 30% equity in the deal. This person making 10% each and every single month. That's a good investment, for that investor. That's a performing note because the borrower's paying every month. You don't got to worry about it. That's like a cash flow move. But then you also have non-performing notes, which is attractive because that allows you to get properties at a discount even more than, you know, if you bought the physical property. So with non-performing, obviously that means that the borrower isn't making payments. So when they're not making payments, you can buy that note at a larger discount. A lot of times 40% LTV, 50% LTV. You can't buy physical buildings like that right now at that LTV. So the thing is, like I told you, when you buy non-performing notes, you want to make sure that you're buying stuff that you wouldn't mind taking over because they're already not paying. So the probability of you having to foreclose or do a deed in lieu of foreclosure, is when, you know, you have them sign off on a deed and give it to you instead of you having to enforce an actual foreclosure. So that means you don't have to pay no legal costs. You don't have to wait for the duration of the foreclosure. You get that thing right away, and that's beneficial for them because they don't have a foreclosure on their record. They're not going to ruin their credit or anything like that. They just get to walk away scot clear. But you now have this property at 40-50% LTV. So it's another strategy of acquiring properties, but at a bigger discount. You know what I mean? So you get that property, you fix it up, and you sell that thing for astronomical profits. That's another way to get in the game. You know what I mean? So
yeah, I won't lie to you. I did not know about that. I knew the notes process. I didn't know what you just mentioned over there, like the 40-50. I didn't know all that. That's beast.
Yeah, like if I was to buy notes, if I was to buy notes, like me personally right now, like I care about cash flow, but I would do it I would focus on the non-owner. I mean, not non-owner, the
non-performing.
Yeah, for the equity and stuff like that. Yeah, because then you can still rent it out and get crazy cash flow as well.
Exactly. Yeah, that's a fact. That is a fact.
You just dropped some fire.
Definitely just dropped some fire. Nobody's talking about that one. Nobody's talking about that. I swear you don't hear that too often.
And one other thing to add to it, you don't need to have your money. You don't need to have money to capitalize off of this business model because again, it's just about connecting with the people who seek the return. So I gave you this situation before. Let's say you reach out, you meet a doctor, a lawyer, somebody, they want to get into the game, busy, they just got the money, right?
Yeah.
A lot of times, let's say, you know, I do a loan at 12%, first time investor, and, you know, 12%, 70% LTV again, you know, so it's 30% equity in there. This guy paying 12% and it's performing. You know, 12% is a pretty decent return. And if the thing is, these investments are secured by the physical property. What other investments are secured? Like, you know what I mean?
Nice.
So, 12%. Let's say you know this guy, you say, okay, I got this thing, I give you a 10% return on, you know what I mean? On this investment, you pitch it to them, they're like, great, sign me up. Now, let's say that's a 30-year loan. Now, obviously, somebody ain't gonna pay 10% for 30 years, but you know, for this scenario, let's say it's 30-year loan. You got the loan at 12%. You give this investor 10%. So now, for the next 30 years, you're making 2% on that transaction. You know what I mean? Let's say it was a $500,000 loan. 2% of 500,000 is 10,000. You know what I mean? Then you're not gonna make that over at one lump sum. You're making that every single month. So that's like 10,000 divided by 12. That's like $800 a month you're making on that investment. You know what I mean?
Mm-hmm.
You do that 10 times, it's 8,000. You know what I mean? So, and you don't doing nothing. All you did was connect the dots initially. You know what I mean? And you don't have anything else. That's just residual money that you're continuously making.
And I just want to specify or clarify for listeners, like when he's saying like 12% and 10%, he's talking about how much somebody's paying in interest, because that's what you as the lender in a sense, right? That's what you're receiving. That's how you get paid, through their interest payments.
Yep.
Mm-hmm.
Right.
That's dope. So now my head is spinning right now. My head is definitely going into different directions. Like, oh, I wonder if I could do this too. That's what's up. Yeah. Where can they find you, bro? Like, where can they find you? Where can they learn from you? Like all your, promotions stuff. Let them know everything right now.
So, the easiest way is Instagram, at Rod underscore flip funding. No, I'm sorry, at Rod underscore hard money. That's my handle. And you'll tap into my link tree. From my link tree, you can learn how to become a hard money lender. You can learn more about becoming a hard money lender. You can learn more about our loan products that we offer. You can send me a message. You can sign up for my newsletter. And just follow me, and support, because I do free lives, you know what I mean, all types of trainings and stuff like that, so yeah, reach out any way I can help, and I got the time to, I will, for sure.
That's what's up. That's dope.
Definitely, y'all. I hope everybody listening really taps in. Like, Rod is a wizard, as y'all could tell. He just dropped so much knowledge that me and Noski about to go buy a property tonight. Like, we might fund the property tomorrow. Like,
yeah.
I appreciate you a lot, bro.
No, likewise, y'all.
Appreciate you, bro. For everyone who's still watching, we appreciate you. Thank you. Please make sure you like, comment, and subscribe to the channel. Plus that little notification bell, because we drop
2 videos a week,
and you don't want to miss them. All of Rod's information will be below, so make sure y'all tap in. We will catch you next episode, but until then, peace.
Peace, y'all.
Soundstripe.